Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hey guys, morning everybody. Hope everybody's doing great. They've had a great FOMC week. I know I have. So where to begin? I'm flying solo today. So if you guys want to review what happened during FOMC, we could definitely do that. So let's just review the calendar really quickly. So if you guys haven't traded a whole lot of FOMC weeks, this one was particularly important because we have the Fed fund rate as well as the press conference. So sometimes we only have meeting minutes, and those events are not as important because a lot of times they just recap what they talked about at the last meeting. Sometimes there's some revisions in the sentiment and narrative, but a lot of times not so much. We did get a 25 basis points cut from the Fed, which we were all expecting, or at least if you pay attention to macros, you should be expecting. And there's talk of further cuts. Okay, so that is gonna obviously boost the dollar a bit, but also it's gonna cause index markets to rally. All right, so typically when I come to weeks like this, these 2 days are usually days where I just kind of sit still. I try not to trade a lot. If I do trade, I'm very cautious of how far the markets can run, and I'm typically flat ahead of this. And then I usually don't do anything until 2:45, 3 p.m. after the press conference, even later, because once this press conference starts, Powell could start saying anything, right? And that's really what we have to avoid. We have to avoid some of that chop initially to try and figure out where the market might go after the conference is over and after we actually get the sentiment from the Fed. So obviously here we see this nice run on Monday. Okay, and then leading up to the event, it kind of just drops back into the range. We've taken out Monday's low, so this daily low here was very important. And then here is all of our FOMC. So between 2 p.m. and 3 p.m., we have this very large candle. That candle also leads into the closure of the 4-hour candle. Okay, so 2 p.m., we get this very large run lower. So here we have the 2 p.m. rate announcement. So we have the rate announcement, which typically is not the event that I'm trying to trade. So we have the cut. So everybody knows that we cut. And then leading up into the speech, right? We've taken out Monday's low here. And usually during FOMC weeks, if you guys study this enough and you trade enough FOMC weeks, I've been trading for 14 and a half years now. I think in like February or March, it's going to be 15 years. Think about how many FOMC events I've traded throughout that period. A lot, right? And I've lost a lot of money in the beginning half of the week and then not had any dry powder left for the rest of the week. So typically what I like to see is some type of volatility event, which is FOMC, and then usually through the remainder of the week, we get continuation. Okay, so this is our FOMC week. So we can very clearly draw out, this is our FOMC meeting. Once we punch that low, this market doesn't get any follow through and it starts trading higher. Okay, now in here, right, if you study ICT concepts or market structure, this is our bullish breaker. So if the market were bearish, essentially, why would it go and take out the high from the rate announcement? To me, that wouldn't make any sense from a short perspective. And if you guys have studied anything, any of the way that I trade these engulfing candles. But when this engulfing candle right? This bearish engulfing candle, which takes out the high and then the low. When those appear at a swing low, right? So we have this market. When it appears at a swing low, I tend to avoid them. Okay, so you want to see those bearish engulfing candles occurring at a swing high, and that there's room to run. So this candle here, right? There's actually room to run lower, which is our bearish engulfing candle. But because this candle here is already so close to that Monday low, we take out the low and then it just completely reverses. Okay, so we have this sell side liquidity here. And this is just speaking from a low time frame perspective. We have this sell side liquidity here. This can be considered a market structure shift because we have an old swing high being broken, right? And a closure above that swing high. And then the market just continues higher. So if you guys follow the trade that I took on Twitter, right? Essentially, the way that the daily candle closed, and I'll just go to the daily chart real quick to show you. This candle here, this daily candle here, for me, was screaming massively bullish. So all I have to do is predict where that next daily candle is going to go. Right? That's essentially all we're doing is we're making an educated guess on where the next 24 hours is going to end up. The fact that we have this very long wick and we have FOMC and we have that bullish breaker on the lower time frame, all I'm doing is anticipating that the market is going to continue higher through the rest of the week. And that's really trading around the calendar. Okay, so we have the FOMC announcement, right? We get a lower time frame bullish breaker, and I'm bullish for the following day. So this is really where I don't really pay attention to kill zones. Okay, so all I'm looking for is on a 15-minute time frame. Here is our 445 candle, right? The market closes, and then as soon as the market opened up at 6 p.m., right? And this relates to anybody that's trading futures, whether it's personal or prop. There's a downtime between 5 p.m. and 6 p.m., which overnight margin rates increase. So a lot of times your broker will just liquidate you and you probably would have to reopen the position. Well, with prop firms too, you can't hold overnight. So if it's 4 p.m. or 4:10 p.m., I think some prop firms close their positions at 4:10. Some, I believe Apex lets you to hold it till 5 p.m. Just double check on what your prop firm actually allows. But this is essentially how you can swing trade overnight. It's just you have to just close the position. But let's say even if you were long after the meeting and your stop loss is like down here below this previously broken swing low, and you're in the position. All you have to, and let's say you're up a little bit. All you have to do is close the position and reopen it with the same contract size, and essentially you're going to have the same level of risk on. Right? And this is how you swing trade overnight with futures prop firms or futures accounts in general. Is if this market doesn't gap too crazily, let's say you're up $50, right? And your stop loss is $100. Or let's say your stop loss is $500. You're up $50. You just close the trade at $50 profit. If you reopen it, now the stop loss is $550 because it's going from here to here. But you're taking the same level of risk as if you were still in the trade, right? As long as this price from the close here is not that different from the open here, right? So it's basically as if you never left the position. And that's how you would swing trade overnight, okay? And that's how I got around those overnight rules, because people comment on my stuff and they're like, how do you trade overnight? You can't trade overnight. That's fake. Well, if you're smart enough, you would just close the position and reopen it. As a swing trader, you can just continuously close and reopen positions, and it's almost as if you didn't leave the trade, right? So this is the continuation I was looking for overnight. And what I did was I just closed the trade ahead of the 8:30 news, right? So what happens is I'm looking for that continuation on FOMC, but because I know that there is another news item coming out at 8:30 a.m., again, I'm trying to trade in between those news events because I don't know what's going to happen with unemployment claims the following day. And usually when it runs overnight, it's going to create a gap at the open, or it's going to be at a premium when that next news event comes out. So here's our 8:30 news, and you can see we got a deep retracement. So typically leading up into news events, I will trail my stop or I'll just close everything out. I just closed everything out because this was enough of a, risk reward for me to just be comfortable with. And now that today we don't have any news, and I've already made what I wanted to make for the week, do I really want to trade today? Not really. The daily candle already moved in the direction I was looking for. Do I think this market's still going to go higher? Possibly. But I'm trying to limit the frequency and the amount of trades that I take on a weekly basis and on a daily basis because I don't like going into weekends with losers. And I'm trying to always be mindful of the frequency that I'm engaging with the market. So there's that on index markets. So what I'm looking at is I want to see this candle that has a very long wick here from yesterday. I want to be able to see this be held and then the market just continue trending higher because all it's doing is creating higher highs and higher lows. So if you're trying to short this market, yes, you can make some money, but it's very short-lived, right? Bull or bear? I mean, it's kind of obvious from which direction the market's going. If this market continues to create higher highs and higher lows, you should not be shorting it, okay? Just because the market is high does not mean just all of a sudden short it because markets can just keep going higher, right? And that's where markets can remain irrational to you longer than you can remain solvent. And when a market is just moving in one direction, I tend not to do anything opposed to that. Yes, there are opportunities to short, but those days, like, let's look at all of the bearish days. All right, if you're leaning bearish, yes, it's great. You get 1, 2, 3 days, maybe, I wouldn't even count these days, 4, 5, 6. Just the ratio of bullish days to bearish days is outweighed, right? It's skewed in the opposite direction. So it's mainly bullish because these index markets are not meant to go lower over a course of, 5, 10 years. Because you have to think about what are the mechanics of an index. All right, there's 100 companies in NASDAQ. If there's a company that's underperforming, what they do is just pull it off the index and replace it with something else that is performing. Not only that, but we have everybody that has retirement funds. They typically don't sell until they hit retirement age. And they're typically just investing a little bit of their paycheck. Every single paycheck they get, some of that money goes into these markets, right? And a lot of that money is just long-term. So when there's not, when the buyers are outweighing the sellers long-term, you are only going to get very, very short windows where you can lean short in the market. But with rates being cut, we're probably going to continue to see a drifting higher of price action. I mean, right now, market's a little bit high for me as far as like a weekly candle goes because I'm always anticipating, all right, this weekly candle's already expanded. I've already made what I want to make. I can come back next week, and what I would like to see next week is the next weekly candle to trade lower first before I reposition myself long for it to close higher on the week. Right? If the market is already expanded, what are the odds that it's going to keep expanding? Right? Because like if we measure our weekly candle from last week with this week, right? This candle capped out at some point. It stopped trading higher. And then the next week, if you just waited, right, maybe you're not going to suffer the loss inside of this wick, right? Let's say if you went long on Friday, well, Monday and Tuesday are going to trade against you. Wednesday, well, this is the Wednesday. Wednesday created the low of the week. Whatever that news event is when you're anticipating the low of the week to be printed, right? That's that manipulation that you're trying to avoid. And this week was FOMC. So here you have FOMC. Market traded up first on Monday. Maybe it got a lot of people to go long on Monday, right? Thinking they could just continue holding throughout the whole week, right? Let's say if you're in this long position and then you don't take anything off, anticipating that we have a major news event on Wednesday. What happens is it reaches a premium and then it just drifts lower into the event, taking out everybody that was long earlier in the week. And then once they take everybody out that's long in the week, now all those people that were long, they don't have the mental capital to get back into the market with the same idea, right? And sometimes trading is about having that idea and giving it multiple attempts before you change your analysis. Right? Just because the market is going against your idea does not mean that all of a sudden the idea is wrong. And it's about risk management. Okay. I do not win on all of my trades. This past week I had 35%, or sorry, the past 2 weeks I had 35% win rate and made 200K. So I lost on 65% of my trades. Now, how many of you guys listening to this are comfortable losing on that amount of trades? Out of 10 trades, you're losing on 6 of them. They're not full losses though. Even if I put my stop loss a little tad bit below break even, still counts as a loss, right? But it's not a full loss. So if I can reduce my stop loss, if it goes in my favor, and I get stopped out for 0.25 R, right, or 0.1 R, that next trade, all I have to do is make 1 R to make all of that back. And it goes the same as if you're taking full stops. You could take 3, 4, 5 full stops in a row, and then all of a sudden, 1 or 2 trades makes all of that back. But it's about when you take those losses and you're on the losing streak, that you don't just automatically change your direction and just start making mistakes left and right. You have to remain calm and composed, even in those rough periods, right? So let's talk about dollar index and the euro. So, I've been calling for these levels down here. I'm not sure if I called them out on this stream with Tradin TV, but I'm sure I have. I told you guys that I was looking for those lows, and it didn't get to those lows very cleanly. Like, you had to sustain a lot of sideways price action to get down there. But we eventually did get down there, and this is all of the price action that most traders just can't sustain. They don't know how to manage themselves when the market's going sideways because they're aiming for home runs and they think that the market has to go to these levels on their timeline. Okay, the market doesn't operate on your timeline. The market operates on its own timeline. And the only thing that you can control is your risk management, your position size, and your mindset around the idea. Okay, because if you just completely abandon the idea and you're getting chopped and eaten alive inside of the range, then you don't have the mental capacity or the stamina to reposition yourself and maybe make all of those losses back. Let's say you take 2, 3, 4 losses in here, but then you catch this one trade, right? Maybe you catch this one daily candle and you position yourself in here and you're going to swing it lower and you have the opportunity to scale in 2 or 3 times, right? While adjusting the stop losses to a reasonable level. Just these 2 days here, just 1, 2, where it goes down, and maybe 3, where it takes out the liquidity, you're going to make back all of those losses that you took inside of this range. Is there any other candlestick patterns other than engulfing pin bars and inside bars that you use? Do you always combine these candlesticks? Yes, I always do. And let's talk about the euro. Okay. So this euro, this was CPI last week. Okay, so last Thursday we had CPI. This is a bullish engulfing candle inside of a fair value gap. Once we get this, I'm like, in my eyes, because we have so much liquidity resting up here, we have these highs here, and then we have this high here, right? And this is our low resistance liquidity because it did not create a higher high. This is setting up for that run higher. Okay, and that doesn't mean that if you take a loss on this day, that doesn't mean that the trade is invalidated. It just means that your stop loss management and your stop loss placement, your entry, could be better. Okay, so just the fact that this next day, yes, it's very sideways, does not mean that the market's going to go lower. Because if you just look at what the price action did from the prior day, what did it do? It created a higher high. And it also created a higher low, right? So just the fact that this day was very small doesn't mean that this bullish sentiment is over. It just means maybe you position yourself wrong. The next day, the intraday price action will throw a lot of people off because they're thinking that in the current moment, just because the market's going lower means they should be bearish. And that's not necessarily the case. okay, you actually want to see it trade lower so you can position yourself inside of this here, this intraday price action run lower to anticipate that the next daily candle and the daily candle after that is going to trade higher. So as it currently stands, I would like to see the index markets continue higher. But because it's Friday and because I'm tired, or my sleep quality last night was pretty bad because I didn't get home. I was out at dinner with some friends, my paintball team, till like midnight. I can feel myself like on edge. Maybe my breathing is shallow and I'm just overall exhausted. And those are the times where you're trying to avoid making dumb mistakes. I don't know if you guys follow Lance Brightstein. I'll just show you something that I tweeted the other day. The surprising factor that had the biggest impact on my trading after years of data collection, crazily enough, good sleep, and had the highest correlation to my daily P&L. How many of you guys trade overnight? You were trading the London session, you're trying to trade the Asia session, you're staring at your charts and it's not really doing anything. And then when it comes time to trade, like when it comes time to trade FOMC, let's say you stayed up all night trying to trade London session and the market's not moving the way you want it to move, right? You're taking stop losses, whatever, blah, blah, blah. And you're anticipating the market's going to trade higher on the week, right? And this is the move that you're waiting for. But you're so tired and you're so fatigued that you can't operate properly. So you make mistakes. You're over trading, you're over leveraging, and then you blow your accounts, or you get daily stop out before the real move happens. I kind of want to hear you guys chime in, because that was me for a very long time. That was me. I was awake, a vampire, more like a zombie, overnight on these markets, and I just didn't have any patience. And I also had a lot of FOMO. I thought that I needed to trade every single session and capitalize on every single opportunity that was presented to me. So for me, sleep is like one of the biggest deciding factors for your performance. And the thing is, what you realize is that the markets will always be here. If the markets are not here tomorrow, we have bigger problems to worry about than making money. Okay? But the fact that I know that whatever price this market is trading at tomorrow, this market could jump 10% tomorrow. Let's say the market's trading up here tomorrow. Does it really, do I really care where the price is? Let's say the market puts in a nice swing point. Do I really care what that price is if I try and position myself here? I don't really care. Maybe I use a smaller position size because I can still frame out my stop loss here, or my entries here, and maybe my take profits here. Right? I'm still framing out a 2-to-1 risk reward ratio with the same amount of risk as if I were to enter it this day. Right? So does it really matter if you miss a couple days? Does it really matter if you miss a couple weeks of trading? It doesn't. And the only way that I realized this was when I was, blowing up accounts when prop firm wasn't, props weren't around when I started trading. I was trading my personal account. So I would load up 2,500, 5K into my personal account, lose a fair bit of it, get a sour taste in my mouth of trading, and then disappear for 3 months. When I came back 3 months later, I had more mental clarity, and I realized like these markets aren't going anywhere. Okay. Somebody's asking any tips for controlling emotions. Here's the thing is you can't control emotions. You can manage emotions, but nobody can really control emotions. Everybody gets angry, everybody gets frustrated, everybody gets excited, everybody gets happy. And a lot of times that's just a biological response of what your body and your mind is going through at that specific time. But you have to be aware of your emotions, and that's where, for me, meditation comes in. Meditation and breathing. Because if you can't sit with your emotions for very long, you're going to make very poor mistakes. So you can't control your emotions. Like if you could control your emotions, you wouldn't be a human. You'd be a robot. And that's not what we're trying to do here. We're trying to learn about our emotions and our emotional triggers and go from there. When I'm in a drawdown, do you limit the amount of the trades that I take? Yes. And the way that I do that is just waiting until the daily, the higher time frame is aligned with what I'm trying to do. Like if I come to the charts and I just quickly scroll through all these markets, and if something doesn't really jump out at me, I don't take the trade. For me, I'm actually still pretty bullish on the euro, but as it's trading lower, because I'm bullish on these higher time frames, like I'm bullish on the quarterly time frame, just because it's trading lower does not mean that I all of a sudden take a short position, because my targets, a lot of times, let's say if you're bearish in a bullish market and you're trying to target liquidity, it's probably never going to go there. Okay, so when you look at these markets here, let's say if you wanted to get short on a market that's bullish and you're trying to use these lows as your liquidity, right? The market doesn't go there. And not only that, but when you look at this price action, you wouldn't really know when to exit the trade. So like, yes, you're short, but where's your target going to be? So when the market is going higher, you can put your target at old highs and with a greater deal of confidence that the market's actually going to trade to those targets and hit your stop, take profit. How to navigate choppy price action? You have to be mindful of how many trades you're going to take, first of all, and you have to be mindful of your risk management. Because if you're always anticipating these major moves and these major breakouts inside of chop, you're going to get eaten alive. And sometimes these markets go through very long extended periods of sideways price action, just like this. This was very sideways. But then we get here with CPI. Maybe this is one of the biggest drivers that we've had since the beginning of August. So maybe all of this price action leading up into CPI is just noise. This is really what we're looking at. And now that we've taken out liquidity after FOMC, maybe this is just a return to the range, which, you know, if it's going to continue going higher based on where I think the market's going to go, you know, I could be wrong, but if I'm still bullish on this time frame, right? Because let's say we have 11 days left in the quarter. But what did this quarter do? It still created a higher high compared to the previous quarter, and it's not even close to the previous week quarter low. So does that make this market bearish? No. It just means that it's a short-term pullback possibly before it continues higher. Let's say this market closes in 11 days and it's kind of just like this, or it's kind of just sideways. Which side of the market are you more likely to take? For me, I'm more likely to take a long. That's just me, right? So when the market is going lower intraday, do I really touch it? No. Unless you're like a short-term trader that's trying to trade against the trend. But this is FOMC, right? So FOMC, we have this very large bearish engulfing candle. And then the following day is just continuation. So this spike up, right? Spike up, just trades into a 4-hour fair value gap and then goes lower. So yes, there's opportunity to trade against the current, but I'm usually just waiting. Like when this market's going lower, I'd usually just wait because I don't have a clear target of where it wants to go. Does daylight savings time affect the kill zone times for you? Yeah, sometimes. When daylight savings times comes around, I'd usually have to give it like a couple weeks for the market to kind of, you know, get back in sync. Do I ever use COT commercial? No, not really. I try not to be influenced by too many things. I try to keep my trading very simple and straightforward. Because at the end of the day, I can't control what the market's going to do. At the end of the day, if you zoom out, all this market is really doing is just ticking up and down in a very aggressively sideways manner. Right? And this is where your patience has to come into play, is because if you place a position, this market is going to chop around on you, and is going to make you uncomfortable with the P&L. But that's the problem, is you're focused on the P&L and you're not focused on the actual market itself. Just think of this market as a line graph, okay? The market, all it's doing is repricing and price discovery, and it's creating higher highs, higher lows. And the market structure is just chopping around on you. Well, that's why it's important to have stops in place where if it goes to the stop loss, your trade is invalidated. But that doesn't mean your idea is invalidated, okay? Because you can get the idea wrong a couple times, and then that third or fourth trade that you take is the one that ends up being a winner, okay? All right, guys, hold on a second. My mouse is like not working. There you go. Let's go through some questions because I honestly, I don't know how long I'm going to stay on here. But yeah, I personally would not be trying to short these markets. That's just my opinion. A good Dixie feed. This is the one that I use. TVC. Trade frequency for a break-even trader. Honestly, I say for me, always less is more. Okay. Do you journal your trades first of all? It's on how many accounts? It's on one account. It's my personal account. TVC doesn't show new day opening gaps is because there's no rollover period. They don't have a rollover. It closes at 5 and it reopens at like 5:01. So you don't have new day opening gaps, guys. I just cleared my account, which was in a huge drawdown, all thanks to your teachings. Yo, that's sick, man. Okay, so if you journal your trades, are you actually learning from your trades? Because when I was, listen, this is the problem with most traders is they take so many trades and they never learn from any of those experiences. You know, they take 5, 6, 7, 8, 9, 10 trades in a day. Think about how much work you have to take. You think about how much work you have to do to journal 10 trades. I don't even want to journal one trade, guys. I don't even enjoy journaling one trade. And it creates so much work for you that you just end up not doing it. You just end up not journaling because it's too much work. You got to go in, you got to figure out, you know, where did I put my stop loss? Where's my take profit? What's the risk reward? What did I do during this trade that's wrong? All that stuff takes time. Imagine you're trading for 8 hours a day. You take 10, 20 trades, and you got to sit down and journal for 4 hours. I mean, to me, that doesn't, to me doesn't make any sense. I'm trying to take 1 to 2 good trades a day, and that's it. What's the average on one Apex account? I mean, when I was trading with Apex, which I can't anymore, I'm banned. You know, my average day was like $20,000 to $40,000. But that's because I had a massive buffer in my account. Before I took my first payout, I had like 250K in profits. No, I think more. I couldn't withdraw from my accounts until I had 15K because like the first day or two, I made 5K in every single account. And because of the consistency rule, I had to make like 15K to withdraw, which that's not my focus. My focus is not to, calculate in the future. This is where this is going to help you guys. How many of you guys buy a perm account and you look at the payout cycle window and you're like, well, I can get a payout in the next 7 days. And then all of a sudden you're trading to hit the 7-day payout window because you're so focused on getting a payout. And then you blow the account and you're like, what did I do? Instead of just focusing on trading and not worrying about when you're going to get paid out. And that's the difference between somebody that is in the proper mindset that doesn't need the money. Okay, a lot of the profitable traders I know do not need the money. Okay, we don't care about the money, we care about the process. And we don't care about when the next time is we're going to get paid because when we get paid, we know we're going to get paid a lot. We don't have to worry about paying our bills, okay? We don't have to worry about anything else like that. We don't have to worry about making money. Maybe we have other income sources. many of the traders that I know are running other businesses. Because if you do this properly, trading should not be taking up all of your time. Okay, you get everybody listening to the stream is getting into trading to leave a full-time job. And they think they want to be a full-time trader until they become a full-time trader and they realize I'm working just as many hours, if not more, in the markets, and you don't have any freedom, okay? You're not trying to be a slave to the charts. For me, if I can make if I can make a lot of money on Monday or Tuesday, do you think I'm really trading Wednesday, Thursday, or Friday? Let's say you're and I'm gonna go back way back to when I first started to become profitable. And I was only trying to make 1 or 2K. Okay. If I made 1 or 2K on a Monday or Tuesday or Wednesday, I wanted more, right? But it's about honestly being content. Because let's say if you wanted to make 1 or 2K and all of a sudden you make 3 or 4K on Monday, now you're greedy. You're like, this is amazing. I want to go back into the markets and do more, because it's easy. And then you give it all back because you don't have the discipline and the I don't know what I would call it. You have to be able to pull yourself out of the markets and out of all the noise and just say, dude, I made way more than I wanted to start the week. I can take the rest of the week off. And that's my mindset. My mindset is like, how can I make my work week as short as possible so I could go get off the screens and go live a life that I truly enjoy? Because trading, while I'm passionate about, it's not something that I'm trying to have consume my life. Okay, because when it consumes my life is when I perform very, very poorly. Is there any setup for today? For me, there's not. I broke down the setup that, listen, I took 2 trades this week and I made over 100K. Do I need to find another setup? If you already missed the setups that appeared earlier in the week, I don't know what to tell you. Okay, this is you reviewing your charts at the end of the night. And then let's say if you missed the post FOMC move, which in my opinion was extremely clear, we got a massive bullish engulfing candle. And then the next 4-hour candle, there's no retracement. Okay, this is all just manipulation, right? Even if you're just looking at this one fair value gap, all you need is one rectangular in chart to realize like, hey, this market is going to go higher. And if you miss it, you miss it. Okay, because I've spent way too many, days where I was up on the week and wanting to trade on Friday. I take a trade, but because the market's already moved for the week, it just would dump on me, and then I would give back everything that I made earlier in the week. So yes, it could go higher, but it can go higher without me because guess what, guys? The market's going to be there on Monday. The market's going to be there on Tuesday. The market is going to be there next month. It's going to be there next year. It's going to be there 10 years from now. And if it's not, again, we have bigger issues to worry about than the markets. Okay, you have to manage your greed and you have to manage your you have to manage your mindset because a lot of you guys, and I know from experience, a lot of you guys are mentally unstable because you need to make this work. There's too much pressure on you because you're the person in your family that's supposed to change everything, but you're going about it the wrong way. If you want to change the landscape of the situation of your family, you have to trade like a professional. Okay, and professionals are not just gunslinging. Okay, we're not in the markets all the time. We're just waiting for the one ripe opportunity that we can place a proper risk reward position in and possibly scaling into that trade and then leaving. Okay, I'm talking about like this is so relatable to casinos because people that gamble, they don't know when to leave. But people that gamble professionally, they know when to leave. They know that they can come in and play a hot table, make their money, and leave. Because the longer you stay, the more at risk you put yourself of the market taking your money. So me, even though I hold trades for longer periods of time, once I'm done with that trade, I have to reset. I'm not just closing the trade in a profit. This is what I used to do, right? I used to close a trade in a profit, which I'll show you guys, the execution that I took. Here, hold on a second. So this is what I used to do, okay? I would have this trade here, right? Which was a great trade. I went long. 0 drawdown. I think I had $12 in drawdown to make 98K. What I would do is close this trade, and then all of a sudden, what I would do is just go back over here and then just do this. I would flip through all my charts, and then I would come in here, and I would place another trade. As soon as I exit that other trade, because I needed action. I needed to be in the markets all the time. And instead of just taking my profits and running and resetting and waiting for the next opportunity, I did not have any patience, and I would give back all that money. So I'd take a small loss. All right. So let's say I made all that money. Whether it was $100 or $150, don't look at the 20 contracts and be like, I'm going to do that. Okay. I worked my way up there, but I'm just saying I started with a micro contract. Okay. Or I started with micro lots in forex. Okay. What I would do is I would have a really big trade that was really great. And then I would come into the markets and then trade, take a small loss, want to make it back, take another small loss, want to make that back, take a bigger loss. Now I'm pissed off. And I oversize, I put on a bigger size to try and make back what I just lost because I was stupid and didn't know how to control myself. I was undisciplined. And then all of a sudden I was back at break even when I could have just walked away from the charts and protected my mental capital and my sanity. Okay. And that's something that you guys are all going to have to experience. You're all going to have to go through that. And there honestly is no shortcut to it. You have to be able to pull yourself out of the trenches and be comfortable with whatever it is that you make. All right. Sorry, give me a second. Yeah, so once you're profitable and bring in 10, 20K a month, you advise investing. Yeah, I mean, here's the thing is you have to weigh out where your financial situation is. Okay, so you should always have some money that's liquid. But the guys that are worth a lot of money, right? Let's say you're worth 100K. It might not be best to just keep 100K in the bank because if you just keep it there, inflation is eating away at it. Okay? So you have to figure out what your expenses are. How much capital do I want to have on hand? That makes sense to me. I just withdrew from my NinjaTrader account because they don't offer SIPC insurance, which is a big thing. Like I don't want to run the account up to multiple millions of dollars and then all of a sudden there's a broker failure and now I'm not protected on the money. None of my money is protected. There's other brokers like Charles Schwab or TD Ameritrade that trade securities that will protect your capital. Okay, they have insurance and they have fail safes for that if that insurance doesn't cover it. Okay, like I think TD Ameritrade will cover up to like $38 million, which a futures broker like Tradin, they might not cover that. They might only cover. I don't even know if they cover 250K. So, from a trading perspective, I would personally not have more than you're willing to lose in your brokerage account. So let's say you need, I don't know, 10K or 20K in your trading account to kind of pay your monthly bills and try and grow a little bit of capital. And you have another $100,000 or $80,000 in your bank account. You should probably find something to do with that $100,000 or $80,000 in a tax efficient manner. Okay. Maybe you're buying real estate and depreciating some of that. A short-term rental, you can depreciate a lot of it. And this is maybe the part of trading in business that just people, they don't have the big picture overview because they're not even treating trading like a business. Okay, if you're running a proper operation, you should understand the tax laws around trading. Okay, if you're trading for a prop firm, you're 1099. If you're trading for futures, there's tax advantages between short term and long term. Okay, 60% gets taxed as short term, 40% gets taxed as long term. So if you had the option to trade CFDs versus futures, I'm choosing futures every single time because of the tax advantages. And then when you get to a certain level, right, now you're starting to look at other businesses. Commercial real estate gets way more write-offs than residential. Okay, you have a lot of equipment that you could depreciate. They get way more tax breaks. You're operating as an S corp possibly. Okay, so when you get past a certain threshold, if you operate as an S corp, you avoid self-employment tax, which will save you. I don't know exactly what it is. Let's take a look. %15%. That's actually a lot. That's way more than I thought. Okay, so as an S corp, you're not self-employed. You are employed by the company. So you pay yourself a reasonable salary and you avoid 15% of your earnings going to the IRS. All right. And ChatGPT is an amazing tool. You could just say, hey, pretend like you're an advanced tax strategist for a multi-millionaire. You know, how should I operate my trading business around prop firms that are 1099? Should I invest in commercial real estate to reduce my taxable income? Should I pay myself a salary to reduce my taxable income? Should I operate an LLC to write off the expenses that I'm incurring every single year? Because trading has expenses. Okay. I still pay for education. I'm about to sign up for a psychology course. I still have expenses. Okay. And I'm still investing in my business. I probably spend $50,000 on education every year because I'm always trying to learn. If I hit a plateau and I just assume, oh, I learned trading for free. I learned trading for free. You know, why do people charge for mentorship? Why do people charge for education? That's not the right mindset to have, to be honest. Tiger Woods still pays a swing coach. LeBron James still spends $1 million on maintaining his body. He has coaches, okay? He has people that help him maintain his performance. And just the fact that there are people in the trading space offering services, people just automatically assume that's a scam. You should be able to learn trading for free. Well, guess what, guys? My time is not free. Okay. I could think of a million other things to do than answer random people online. That's going to make me money. All right. And unfortunately, a lot of the questions that most people ask can be found from a simple internet search. Okay. So if you're going to take up my time and you want experience, right? If you want knowledge like this that I've learned over the years, and how to operate a proper business, how to trade properly, and how to navigate taxes properly, right? That comes with a cost. It's either my time, whether, you know me personally. If you know me personally, okay, I'll give you my time for free. But if it's just a random person online, no, I'm not giving you my time for free. I'm sorry. I mean, I'm on the stream teaching you guys for free right now. But these are all things that you can learn for free. It's just going to take time for you to learn them. But if I point you in the right direction and I say, go into ChatGPT, pretend like you are a tax strategist for a multi-millionaire, how should I structure my business if I am an independent trader who receives a 1099 income from retail prop firms? Outline company structure and tax deduction strategies that will help me save over $100,000 per year. S Corp. Boom. First thing that pops up, guys. Holding company. Establish a parent holding company. Any real estate LLCs. So when you're buying property, put each property into an LLC. The LLCs are owned by the holding company. Okay. It creates liability protection and anonymity. Okay. So if you get sued, they can't. Listen, if everything is under your personal name and you're buying multiple properties and you have 10 properties, if you get sued, they're coming for everything. Okay. But if it's like this, where nobody owns, you own the holding company, right? But if they sue you, it's very hard to find all the other properties that you own. See, purchase property under subsidiary LLCs. Use cost. So here's something that maybe you guys don't know about cost segregation studies. Okay. Cost segregation is basically depreciation. Okay. So when you buy a piece of property, you technically can write off a certain amount of the property over the course of 27 and a half years, I think. With cost segregation, somebody comes to your property and does an analysis on your property and accelerates the depreciation to the first year. So let's say if you have a big year in trading and you want to offset the income, you accelerate the depreciation to the first year. And now all of a sudden you don't have to pay taxes in that 1 year, but you don't get the benefit of the depreciation in the following years. Okay. So you're writing it off up front. That's why you can buy a G-Wagon. That's why you can buy a Cullinan for $500K, $250,000, because you write off a lot of it in the first year. And maybe you're only putting $25,000 down for the G-Wagon. Do you see what I mean? You're putting $25,000 down for the G-Wagon, but you're writing off $200,000 from your taxes. Okay. And this is like the tax game that a lot of people just don't understand, because again, this is business, and I learned about some of this stuff when I was in business class and learning business 101, but this ChatGPT, you can find ways of doing this. Look, write off 100% bonus or accelerated depreciation on vehicles over 6,000 pounds. Obviously, you have to use this for business purposes. You write off business equipment. You write off business use property improvements. Okay, so if you own a home that's used for business, an Airbnb, if you replace the roof, you can write that off. If you replace the HVAC, you can write that off. Okay, you can't write off cosmetic improvements like kitchen renovations, stuff like that. Health insurance. Okay, if you're self-employed as a trader, you're gonna have health insurance. Okay, you can write all that stuff off. But if you don't know about any of it, you just hand it over to your accountant, and all of a sudden you have this massive tax bill, and you're like, you know what I mean? It's because you're not treating it real properly, and you're not treating trading as if it's an actual business. Yeah, first you have to make money, but it's because you're not treating trading like a business. The biggest reason why traders are failing is because they're not treating it like a business. They're treating it like a casino. You're treating each trade like a lottery ticket. You don't know how to just come to the markets, take one trade, leave, and journal. Okay, that's discipline. That's discipline in business. And you have to realize, like, hey, I have expenses. Your expenses are your win rates. So my win rate, 35%. Those trades that I took that were, negative 1R or negative half an R or negative 0.25 R should not set me on tilt, because I know an ordinary business has expenses. I know you want to get back to the charts and trade, but that's the mindset that 99% of people have. It's like, let's get back to the charts and trade, without realizing, like, you guys are so tunnel visioned on the markets and making money. I have to make money today, that it's causing you to self-sabotage. Okay, because for me, when I look at the calendar, okay, Euro's already expanded on day. All right, NQ is already at a premium, and it's Friday, and there's no news. I'm here because I'm teaching you guys, but I'm not here to trade. All right, I already traded the opportunity that was presented based on the calendar and based on the price action. My business is done for the week. I'm closing shop, which with trading, you have the freedom to do. I have the freedom to close shop and not open. All right. But this is all stuff that maybe you guys aren't thinking about ahead of time, because you can do all this stuff properly and write a business plan out for your trading. But you're not doing that. You're not doing the prep work that goes into understanding how a business operates and understanding that I only need to win on 30% of my trades to be profitable. But that window of profitability shrinks as the weeks go on, or as the week goes on, and after the opportunity has already occurred. Okay, those windows of opportunity shrink. And now all of a sudden you are trying to trade in a landmine, right? You're trying to go into no man's territory, and you're putting yourself at risk during not prime opportunities. What about prop firm traders? Do they get to take off? What do you mean take off? Not sure what you mean by take off. If I blew my funded account, how much time did you give yourself to get back to the markets again? Well, it really depends on how you blew the account. Let's say if you blew the account following all your rules, I probably wouldn't wait too long. But if you blew your account and you broke every single rule in the book and now you're emotionally volatile and you're, pissed off and you're angry, maybe take some time off. You're not trading in the right headspace. And that goes for everybody in this stream. That goes for you day to day. Okay, I'm not in the right headspace because I got terrible sleep last night. I've been running around trying to buy a commercial property, and I just know if I go into the markets right now, I'm going to make a mistake, right? Because again, here, the surprising factor, biggest impact on my trading, which, all these outside factors are things that you guys are just avoiding and maybe not paying attention to because you're so tunnel vision on the markets. Again, the markets can be as simple as you want, because the markets at the end of the day is just a line on a chart that goes up and down. If you manage it properly and you're managing your risk properly and your win rates properly, you will make money. But there's not like a reinvention of the wheel here. I'm a successful young guy. What's the next significant thing in your life that you might strive for? To be honest, I've really been getting back into paintball, and that is very fulfilling to me because I'm able to help sponsor the team. So when we went to Dallas, I actually helped pay for like the registration and the paint, and I'm able to help out some of the younger guys that maybe don't have the finances to travel. When I was younger, trading wasn't a thing. Like all I had was paintball. So before trading, I had paintball. And my goal when I found trading was I saw this opportunity where I could make money and maybe travel the world and play paintball full time. That was my dream, okay, guys? That was probably maybe one of the reasons why I kept trading for so long, because, I hated working. I was like, it would be the life if I could trade and make money and travel and play paintball. And then we got third at Dallas, and I can see like how appreciative these guys are, because some of these guys are very young. One of the guys is like 23 years old, and we made it to the pro field for the finals. I could tell that this is like a life-changing event for some of these people, and it makes you appreciate hard work and having a good work ethic, because you get rewarded for that. And that to me was very rewarding. Like that's an experience that this kid is probably never gonna forget for the rest of his life. And a big thing for me is trying to make an impact in the trading space. Obviously, I think I've put out enough content and I get scrutinized by it, but it's the discussions like this where if you want to test my knowledge of a profession, go right ahead, because I've done the work and I've read a lot of books. I've spent a lot of time doing this. But I will say that you don't need to do the same, guys. You don't need to dive deep as much as I have. Like you don't need to read every single trading book. You can just have a very simple process that repeats every day, every week, every month, and go on about your life, okay? And realize that the markets are always going to be here. There's always going to be an opportunity for you to make money. What is one neat trick that you'd use or advice to get new traders to stop their own self-sabotage? That is a very loaded question because I honestly don't even know what got me to stop self-sabotaging. It's a culmination of things, and I think it just comes down to experience. Because if you're somebody that self-sabotages, at some point you're just gonna get tired of doing it. You know, think about like a addict. They're addicted to drugs and they get on a really good path and maybe they're sober for a couple months and then they self-sabotage and fall back into that loop. Um, the only trick that you have to fix yourself is that you get so sick and tired of doing the same things and sabotaging yourself over and over and over and over again that you want to make a change. Some people never make the change, unfortunately. Okay, it's very hard to change yourself and the fabric of your personality. But I think if you want to make trading work, you have to. You're going to become a whole different person if you want to make this work. And trading is going to ruin every other business for you. Because in my opinion, it's one of the cleanest businesses. It has the lowest barrier to entry, which probably attracts a lot of people that are not willing to put in the work. Okay, there's that side of it. But there's an opportunity that allows just normal people to start a business from scratch and make a lot of money. Okay, if you view it that way, where you can start a small scalable business and scale it as much as you want, because I'm telling you guys right now, this trade that I took on FOMC 5 years ago, 6 years ago, 7 years ago, I was making $500 on. Guess what? It's the same trade I was taking. It's just more size. It's more leverage. It's more understanding of my emotions, how I'm going to feel when that P&L increases. Okay? The P&L right now is probably 100 times greater than what I was trading 5 years ago. But the thought process behind what I'm doing is the same. Nothing has changed. And the only thing that I had to change was how I manage my emotions when the P&L gets bigger and bigger and bigger. And like I've said before, I think I have an advantage because if I were to go back in my career, I don't think I would have changed anything because me working in high-end construction, I got super desensitized to numbers. Like I stopped caring about money because you have to start thinking about this as a percentage. 1% of $100,000 is not the same as 1% of $1,000, guys. The only thing that changes is the amount of money that you're controlling. But if you make 3% on $100, somebody else is making 3% on $10 million. You guys are taking the same trade. But it's how do you manage your emotions when the stakes increase? Right? For me, you have to be able to take money out of the equation, which is not easy to do. And not everybody's going to be able to do it because your relationship with money is kind of the root of it. All right. If you come from like a middle or lower class background where money, maybe your parents were fighting about money all the time. Maybe you're struggling to make money. Maybe you're broke. I was broke for a long time. I was overdrafting my accounts. So my relationship with money was terrible. That doesn't mean it's going to be like that forever though. Money at the end of the day is just a tool. It's fake. You know, it's just a number on the screen. And when you can break it down like that and not care so much about it and just think in terms of percentages and how much you're willing to risk every day, things become a lot easier. Do I anticipate a weekly profile based on the calendar? Yeah, exactly. I already kind of went over it. Okay, if I was bullish last week, which I was, okay, this is the closure last week. We had a close above this previous week's high. What am I expecting when I look at this calendar? Am I expecting the low of the week to be printed on core retail sales? Or on Empire State Manufacturing Index? Or on FOMC statement and rate announcement? This is when I'm expecting the low to be printed. But because you're trading on these days and you're trying to go long, maybe you're getting stopped out, you don't have any capital left for when the move actually happens because you had zero patience waiting through Monday and Tuesday. So you're trading. You're taking 20, 30 trades on Monday and Tuesday ahead of what everybody in the industry or what every professional is waiting for. Every professional is waiting for FOMC. Okay, we're not over leveraging and over trading on these days. So this is our weekly profile. This is going to be our weekly low as long as it doesn't come down here today, which I highly doubt it's going to do. That's your weekly profile. What do you do once that weekly profile pans out? Okay, I already got the trade that I was looking for from a weekly profile standpoint. Because when I look at the daily and the weekly, how much further does this weekly candle have to move? And I'm always considering that. Yes, it can continue moving higher, but if I was anticipating a bullish candle, I already got the expansion I was looking for. And I'm not going to chase price higher when the candle's already flipped bullish and it's near the highs of the week. What would you say are the most important things to journal with regards to finding emotional self patterns and making the previous self-sabotage just stick out? You need to write down your emotional triggers. Like, here's what you should do. Let's say anxiety is causing overtrading and closing trades early. But from this anxiety, you have this reaction. Like, this is this decision that you're making when you're anxious. And the only way to do that, to get this to stop, is when you're aware that you're anxious. Okay, most anxious people don't know that they're being anxious until somebody tells them, like, hey, you are being anxious right now. You need to calm down. Sometimes, a lot of times they can't calm down because they're not self-aware of the emotion that they're going through in that current moment. So nobody can fix this for you guys. I can't tell when you're anxious, and I can't tell when you're greedy. I can't tell when you're angry. Let's say you're angry. What does that lead to? Revenge trading. But in the heat of the moment, you don't know that you're angry. You don't know that you're going to get triggered. But when you're journaling and you tag those trades, you start to see patterns in your personality and your actions. Okay, so when I get angry, instead of me revenge trading, I have another path that I take. Okay, when I get angry, I have this other path that I take from a flow chart. Go outside. Just do this, okay? Very simple fix. But it requires you to be present in the moment and present in your thoughts and recognizing that you're angry. Okay, if you have an anger problem, you're not recognizing that you're angry. You're just heated. You're at tunnel vision. You don't know what's going on around you. You're just like, ah! You know what I mean? Punching trading screens. I've been there, guys. Punching my desk. Been there. And you got to understand your emotional triggers, all right? I don't think I'm going to stay on too long, guys. I feel like I dropped a lot of value as far as how you should be operating your business. Tax thing, extremely important, okay? Once you start thinking like this, though, like once I start coming in here and actually writing out what my business plan is, like write out a simple trading process or a routine daily that limits my drawdown and frequency and provide action steps if I break rules. Assume I have a $50,000 funded account with a 3.5% drawdown, like funding ticks. Max loss per day. I personally probably wouldn't even do 500. Okay, stop trading for the day once this is hit. All right, risk per trade also changes. You can possibly take more. Let's say if you're a day trader and you want to take more trades. Okay, don't put your max daily loss on one trade. Give yourself 3 to 5 attempts per day without risking the account. Okay, never allow equity to fall below that. All right, daily routine, morning prep, 30 minutes, review higher time frame, identify key levels, write down 2 to 3 trade ideas, define the daily stop. Only take trades that match your bias and setup. Okay. How many of you guys follow this? Execute with a predefined stop loss. Journal each trade. Okay, this is all stuff that you guys should be doing. How many of you are doing it? I bet 10%, 15% of people are doing this. Post-market, review trades, was bias correct, execution clean, journal wins and losses, and lessons. This is important. What did I learn today? Rule enforcement, right? This is all stuff that keeps you accountable. If you break a max loss rule, stop trading immediately. Write a one-page review of a mistake before your next session. Right? These are all things that will keep you in check and keep you accountable. Always journal before and after your trade. No revenge trading, no over leveraging. Okay, that's a business plan. That is a business plan that you should be following every day. And if you can't follow it every day, go to the casino. Okay, I'm sure there's plenty of casinos around where you guys are. If not, you could drive to one and go blow your money there. Go blow all your money at the casino because you're out here just operating with no structure to your business. Okay, you have no structure, you have no business plan, and those are the people that fail at business. Okay, I've been in multiple businesses. I've tried to start a graphic design company. I was doing web design. I was doing products. So I would, do graphic tees. I was working with a screen printer. I didn't have a business plan. I didn't know what I was doing. I was just showing up and thinking that things were going to work. And that's why people fail, is because they don't have a plan in place for what they should be doing. And maybe I'm ranting and raving, but it frustrates me because I don't think trading is as hard as what people make it out to be. You guys think that you need to know rocket science to trade the markets. Well, here's newsflash, guys. If you follow any of the old school Wall Street floor traders, those guys were not rocket scientists. Half of them were brain dead, right? But they had a plan when they came to the markets, and they had discipline behind them. Okay, they had street smarts. You need a little bit. You need a little bit of both. I think people that are too smart, they overthink a lot of things. And I think people that they don't figure things out is that they think that there's this magical key. Once they figure it out, all of a sudden they're going to print money left and right. Here's the magical key, is that there isn't one. Okay, it's more about accepting the uncertainty of your next trade, because you are never going to find something that's going to give you 100% certainty. At my best trades, I probably feel 70% certain about them. Maybe 80%. But I'm still factoring that 10, 20% if things go wrong and it doesn't pan out the way I think that it's going to pan out. Okay, I'm always factoring that in. Because when you're running a business, there's risks to the business. It's not just, I'm going to start a bakery. It's going to be great. I'm going to make money every single day. I'm going to make money in the bakery. I'm not going to run into any issues. Newsflash, guys. The world doesn't work like that, and business doesn't work like that. For me, guys, again, when I look at the daily chart on Euro, the candle's already expanded lower. So I'm not trying to take this trade. Okay. I'm trying to trade when the candle's bullish and I have a bearish sentiment. Okay, great trade. This, it's like, if I put a short position on, does it actually look good from like a risk perspective? The candle's already low. It's already bearish. So in my opinion, you're kind of chasing the market. Because how much further are you expecting this daily candle to go on a day that doesn't have any news? This expansion, for me, is already what I was looking for. Now, index markets could still push higher, but again, I'm done for the week. I'm not trying to do anything because I didn't get good sleep last night, guys. And when it comes to this, part of my business plan, my daily routine, and this starts the night before. Okay, if I get a bad night of sleep, I don't even go to this step. I don't do morning prep. So for me, when I hopped on the market, when I hopped on the charts with you guys, do you think I did any prep? I already knew I wasn't going to trade. Am I doing prep? No. I'm not doing any prep. I'm just here to have a good time and to tell you guys how you should be running your business. All right. And not just showing up and just winging it. You know, winging it will not get you anywhere. If you just show up to the markets and hope and pray that the market is going to do what you want without having a plan, and you're just randomly doing things around your business, you're not gonna have a good time. All right, you're not gonna have a good time. You're not gonna have any structure, and you're basically just gonna be trading whenever you feel like trading. Which the markets are moving like 24/5. So when are you gonna close the shop and get some sleep? All right, go open up a business, a bakery, and stay there 24 hours for 5 days out of the year. Or sorry, 5 days out of the week. Stay there for 24 hours and operate your business. And you're going to see what happens. Okay? People aren't going to come at 1 a.m., 2 a.m. to buy a bagel. All right? Or it's going to be very slow. But if I know that there's a big event going on next door, right? Maybe they're hosting like a fair or something. That's the day I'm going to be open. And that's the same thing with trading. If I know that the market is going to move post FOMC and there's nothing going on before that event, I'm not doing anything. Am I going to stream Battlefield 6 when it comes out? Yeah, I think so. All right, guys, I think I've been rambling long enough. You know, if you're going to trade today, just be safe. If you take a loss, get off the charts. Don't just sit here on a Friday with no news. You know, if you're up for the week and you take a loss in the AM session, cut yourself off, because I know what that path leads down to. It leads to you wanting to make back that small loss, and you're like, I just need a little bit. I just need a little bit more. And then you go into a spiral, and then all of a sudden you're negative on the week. And you're mentally drained going into the weekend. And you're like, why did I do that? I could have just ended the week, had a great weekend, and come back next week. But no, you're greedy. You have to be here. You have to be making money. So, you know, with that being said, guys, I'm going to hop off. I hope you guys enjoy your weekend, and I'll see you guys next week. All right. Take care.